Hello, investors. The month of June has been a good month for the markets. Markets have been up about 8%. We have not really done that well. We have gone up, but not as much as the market. Because the month of June has been more a case of a very big rally in beaten down stocks and sectors. Fortunately or unfortunately, we don't own much of those spaces. So even the bounce back that we saw in our portfolio in this month has been a little muted. Uh, because this bounce back trade, or what I call a restart trade, is something that is playing out globally. If you look at the mother market, which is the US, you will see that there has been a very sharp bounce in those sectors or spaces where were, for example, the biggest gainers in the US have been airlines, cruise liners, and hotels. These were the sectors which were most beaten down, almost priced for bankruptcy. With the restart trade, the world is getting hope that, well, everything is not going to go bankrupt. Some businesses will survive. And since these businesses have become very, very cheap, there is some buying in it. So what you see is a restart trade that is happening, playing out globally. Also in US, you see this very big phenomena of what we call the Robin Hood trade. A lot of people, because of COVID, are sitting at home and to create some income are playing the stock market. A lot of young people have got checks in their accounts thanks to the Fed, and they're using this to play the stock market. So that is why you see a very big rally that's playing out in a lot of these small and penny stocks. In India also, you are seeing a similar situation. You are seeing that stocks and sectors which were most beaten down in the Jan to March space are the ones that have bounced up, because the markets feel that, well, everything is not going to go bankrupt. Some things may have been beaten down a bit too much. Also, with the number of new accounts that brokers are showing, it is clear that a lot of people are sitting at home and also trading the market. So we almost have a Robin Hood kind of moment in India. And that is why you'll find that a lot of the penny stocks are the biggest gainers that there are in the market. So we have, fortunately, in the fall, fallen less because we've stayed away. Because of that, we have to sacrifice a little bit of the bounce, but we are okay with it because we do not want to go through that path of stocks that are priced for bankruptcy, or stocks that are beaten down, or sectors that are so beaten down that they just have a temporary bounce. We continue to keep the fiber of our portfolio in strong quality earning stocks. So let me share with you what our learnings have been in this month. So what you will see on this slide are the indexes. We have various sector indexes in India, which have performed between Jan and March. You should remember that the markets started falling in Feb and they bottomed out somewhere towards the end of March. So in number 16, 15 and 16 is where the index is. So the indexes fell about 29% in this space. But you'll notice that the sectors that fell the most were the PSUs banks, private banks, media, auto, reality, almost about 40%. So they really fell a lot more than the index. And this is where there was absolute decimation of portfolios. The stocks or sectors that fell the least were healthcare, FMCG, some of the consumption spaces. And this is where we really find our portfolio is aligned to. So you will notice that in this phase, we fell much less than the market. However, let us see what happened in June. In June, what you notice is that the index went up about 8%. But the bounce back, if you remember, the biggest losers there are actually the biggest gainers here. So you'll find that the PSU banks, media, small cap index was absolutely on fire. So you find that this restart trade has fueled the most beaten down spaces. And as I told you, that there is a lot of retail participation that has got into day trading. And that also propels the small cap index, because people are always looking for low price stocks. And that is where you find activity in the small cap index. In this space, the sectors that fell the least, FMCG, healthcare, consumption, you'll find have actually relatively underperformed. So what has been the story in our portfolio has been that we are in the stronger spaces where there are earnings, and that gets clearly reflected that when the markets fell, our portfolios fell. However, we've had a bounce with the market, but obviously the bounce has not been as strong as it has been in probably the PSU spaces or media or real estate, because we feel that these are sectors which may have, yes, got oversold, but the fact is that earnings are still going to lag. And we will not go into spaces or sectors where we feel that earnings are questionable, where longevity of trend is questionable. So that is very much as to what is our core philosophy, which is about investing in the long-term trend. It's not about 1 month. And in this 1 month, you will really see the kind of sectors that have moved up have been the sectors that have been perpetually underperforming for the last few years. The next I went and want to share with you is the performance of the best stocks. So in this month of June, which were the best performing stocks? So you will notice that in the NSE 500, the biggest gainers with over 100% returns are the Reliance Infra, Reliance Power, Renuka, IDBI, Future Consumer, Lakshmi Vilas. So you will realize that these are stocks that have done very well, but these are also stocks which were down almost 90-95%. So from being down 90%, they may have gone up 100%. But the fact is that from the top, they're still 80, 85, 90% down. Again, as I said, and you've seen it in our interactions in the past, that these are the spaces we are not likely to be in, and we don't want to be in, because what is lagging in these spaces is earnings. And without earnings, we are not going to be in those stocks. Essentially, what the market is telling you that these companies will not go bankrupt, but that's the game we are not playing. So to sum it up, the question I ask myself at the end of this month is that, is it the return of the underperformers? But the question I ask myself again is, can they be the leaders? So as far as your portfolio goes, our objective is to ride the long-term trend. Whenever there is such restart or a beaten down trade or a small cap trade, we are likely to underperform, which we have done relatively this month. But the thing is that we cannot change the composition and the core philosophy just to catch 1, 2, 3 months of performance. We build portfolios 3 years, 5 years, and longer. And those are the trends that we are looking for. So for me, the question remains that what do we do? I continue to hold the quality that is there in your portfolio because we feel that this is where the earnings are. It's not that COVID is over. The distress and the pain that corporates will feel will actually start being reflected when the restart happens, when businesses reopen. And ultimately, it is the stronger businesses with good cash flows which will survive. In the short run, as I said, you can have these pullbacks, but that is not going to change your portfolio. We may do a little tweaks, a little overweight, underweights, but we would stick to quality, we will stick to earnings. In the long journey, as I said, we may have a few months of underperformance, but that's okay, because ultimately here we are to create wealth for the long term. We are here to run marathons and not 100-meter sprints. This was a month of a 100-meter sprint, but we are marathon runners and we are building portfolios. We are not going to compromise performance and portfolios of the long term for short-term gains. So with that, I leave you reassured that we continue to follow our process. We continue to ride the trend, and fingers crossed, stay safe. That's the most important at this point in time. Thank you.